Good morning. It's Thursday, November 27th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. Thanksgiving here, so I got a beautiful view of Lake Michigan right behind me. Love to drop a line in that, but it's 33 degrees here and just about on the brink of snowing. So looking at those precious metals, they are heating up faster than a Thanksgiving oven. Starting off with that platinum market, and if you haven't done so, look at a chart of the platinum market here because platinum prices, they surged and it was really overnight following news that there's a launch of a new futures contract over in China, and it increased the optimism about the demand in the country. Remember, a few weeks back, or about a month and a half ago back, we saw this big demand shift going from where the retail participant who's buying jewelry and things like that shifted out of the gold market and really into platinum, looking for a cheaper substitute. And that's what really broke that platinum market out above that 1,000 mark, and futures took off from there. Now you're seeing a lot of increased optimism about the demand in the country here, with spot prices rising as much as 3.8% to nearly $1,650 an ounce, the highest level in over a month. Now this year, platinum has risen about 75% here, and it's really the third consecutive annual deficit supply disruption that we've seen in South Africa. Now the new futures contract over in China, it is available for their individuals and also their institutions and retail customers here, and it's an aim to broaden the participation in that futures contract here. Now in October, China imported about 10.2 tons of platinum, which is more than double the amount from a prior year, driven by some anticipation that there'll be some tax changes as far as state-owned trading companies. Now you look at the silver market, massive move yesterday, up 70% year to date. And it's the global silver market that faces fresh risks as those Chinese stockpiles, they sank to the lowest level in a decade on huge volume of silver being recently shipped over to London to try and alleviate some of those supply pressures that they're seeing over there. Now the inventories and warehouses that are linked to the Shanghai Futures Exchange, they hit the lowest level since 2015. And the drawdowns came after those Chinese exports of the precious metals surged to more than 660 tons in October. It was the highest volume on record. The key levels, and what I've been telling clients here, is once silver on the daily chart, pull that up, you can see that it signaled higher lows on the chart and higher highs where we made a new all-time high. And what I believe is going to happen is that we should see futures hit a new all-time high. So your key trend support on the silver market is 50.30. Below that would be the 50-day moving average at 49.36. And then that kind of make or break line is going to be that Friday, November 21st low, which is 48.71. Now you look at the gold market, up 55% year to date, and it is kind of losing some of the dynamics in comparison to what we're seeing in platinum, what we're seeing in silver and copper. And the only reasoning behind that is because if you pull up 10-year treasury yields, you'll see recently, we've been calling for this, where they went from about 4.14%, that's the top end of the range, back down to 4% here. So you look at gold, it's really advancing here because of a weaker dollar and a growing chance of the interest rate cut year end by the Federal Reserve. So you have structural support in the gold market here, where central bank purchases and also strong retail ETF demand are really taking place here. So any of these big breaks in that market, you're seeing buys from central banks and also from the ETF side. So a breakout above 42.50 should signal, in my opinion, a move back up to the all-time highs. Your key trend support is going to be 40.98. Below that'll be the 50-day moving average at 40.54. 40.32, call that the line in the sand. That's the Tuesday, November 18th overnight lows. So you look at that CME Fed watch tool, and this is something that we've really been monitoring here, is that you now have about an 85% likelihood that the Federal Reserve will cut rates by about 25 basis points at that December meeting. So the point with interest rates is, though, although the timing has been uncertain with that December cut, on the table, off the table, maybe it's coming, maybe it's not. It's the direction of interest rates that is clear, in my opinion. So you look at some of the other things, the dollar kind of anchoring around this 100 level and dropping a bit below it. Those 10-year treasury yields, 3.99% here. We called a drop below the 4%. Many of the clients were able to capitalize on long treasury calls, call spreads, long futures, because of the fact that, remember, it works as a teeter-totter. As interest rates come down, you see 10-year treasury notes rise in value. You also have the volatility index, not only in the gold market, but also in the futures markets, dropping below that 20 mark here, getting down to about 1875. So what's that do? The dealers, the option dealers, their gamma flips back to long gamma, which means that when the markets break, they've got to buy futures contracts, and when markets rise, they've got to sell futures contracts, and it squeezes that volatility and really smooths out the equity curve when you're trading US equities. Now, looking at the ETF flows here, you've got ETFs buying gold, buying silver, buying platinum, and palladium. So you look at silver in focus here, up 16% year to date, added about 0.2% here from yesterday to today. The ETFs added 1.85 million troy ounces of silver in their holdings at a previous trading session. You look at this year's total net purchases are about 113.2 million ounces. It marks the third consecutive day of growth, and this follows Thursday's inflows of 7.5 million ounces, the largest one-day increase since October 21st. The gold-silver ratio, because of this breakout in these industrial metals here, dropping now down to 78-1. So that's kind of my breakdown, my analysis here. This is the things that I look at. I take a very unbiased approach, but I like to see these types of setups take place where you see the chart take off to the upside and you see the fundamentals follow. So you get the when, you get the why, and you get the how that these things are making their moves. So you guys got any questions? You love to open up a futures trading account with us, send an email to info@bluelinefutures.com. Have a great Thanksgiving, and remember that futures and option trading, it does involve risk of loss, may not be suitable to all investors. Good luck, good trading.